Hi, I'm Nevin Williams. I'm a mortgage loan officer and a real estate investor, and today we're going to talk about an exciting loan program called the USDA Rural Housing Home Loan. This is a great loan program for first-time home buyers, but it does have some requirements, and I want to go over those requirements with you. So one of the biggest things of USDA is to help low to moderate income borrowers get into home loans, or excuse me, to get into houses with home loans that have very favorable terms. So one of the great things about USDA is it does not require a down payment. It's 100% financing. But they're very conservative in how much house payment they're going to allow you to have. So under their guidelines, the housing payment cannot be more than 29% of your gross monthly income. So just to keep numbers simple, if you made $1,000 a month, the house payment, including principal, interest, taxes, mortgage insurance, and homeowners insurance, could not exceed $290. If you made $10,000, obviously that's $2,900. So I just want to make sure you understand that that's what a housing ratio is. All of your debts total cannot be more than 41% of your gross income. Now, there is one variance to that, and that's called a ratio waiver. So if you have a 680 or higher credit score, and you have strong compensating factors, meaning maybe you've got some money in the bank, you've got great payment history, that sort of thing, you've been on your job for a long time, the ratio waiver will allow the housing payment to go from 29 up to 34%. And the total of all your debts can go, instead of 41, they can go up to 44%. But they are very strict. They will not let you exceed those amounts. Now, the other thing that the USDA requires is that the property be located in a USDA eligible area and that you meet their income limits. So as far as the eligible area, USDA is not designed to be in a metro area. You're often going to find USDA eligible areas outside of metro areas. How far? It just depends. There's a map, and we're going to pull that up in a moment, and I'm going to show you a couple of examples. We're going to use a couple of towns in North Carolina to show you what's eligible, what's not eligible. The other thing is, as far as income limits, is if you make too much money, you are not eligible for USDA. And they're not just looking at the income from the person who's applying for the loan, but they're looking for income from all people that are going to be in the household. So for example, let's say you have a married couple and they're taking care of mom, and mom lives with them. Well, if mom gets Social Security and both the husband and the wife, or the couple, are also receiving income, USDA is going to take all of that income, including mom's income, to determine eligibility. And if that income is too much for USDA, then you do not qualify for this loan. All right, with that, I'm going to pull up some maps and we're going to go over this. By the way, USDA only allows a 30-year fixed rate mortgage. USDA does not offer any adjustable rate mortgages. They don't have any mortgages with risky terms like balloon payments, negative amortization. They don't have those. They don't have 15-year fixed rates. They only have 30-year fixed rate mortgages with USDA. Let me see. Okay. With that, let's go ahead and let's jump into the maps and show you what areas are eligible and not eligible. Okay, so if you copy this web address, this will take you to the USDA website, and you click on the Property Eligibility tab, and it pulls up a map of the United States. So what I want to do is I'm going to show a few different addresses to show you whether they're eligible or not. And we're going to do this in the Raleigh area of North Carolina. So let's start off with 217 Thorndale. Oops. So this particular home is not located in the eligible area, and the way you know that is because of this color. So if you see the orange/yellow color, it is not eligible. If the property's outside of it and it's in this unhighlighted area, then it is eligible. So let's try a different one. Let's try 60. So this property is eligible. Let's back out here. Give you an idea. So you notice that the metro areas are color-coded here. None of that is eligible. Neither is this metro area, neither is Charlotte. But as soon as you go outside of these metro areas, all of this is eligible. Let's zoom into Raleigh. Let's try a different address. Let's try this property is pretty close, but it's not located in an eligible area. So you have to be very careful when you're looking at properties. If you say, hey, I want to buy a home in the Raleigh metro area, it just depends where, because you can go just slightly outside of this area and this is now eligible. So it's important to go to this map and be able to pull it up. And really a good way to do it is maybe do it by county. So here's Wake County. And then if you back it out, you can set your search parameters for right outside these areas. All right, now you also have income eligibility requirements. And there's a cool tool here. You click on this. You can pick the state. Let's go to, I don't know, let's do California just for fun. And let's go to, let's do Amador County. All right, so let's say that there's 3 people in the household. Nobody's under 18, 62, or disabled full-time students. And there's no disabled people living in this household. And we're going to say that one applicant makes money and they make $10,000 a month. Keep it simple. We'll say maybe another household member has $800 Social Security income coming in, just as an example. Then we hit finish. According to this, the applicant does not meet the income limits because they're making $129,600 and that is in excess of $111 is the max. So $129, $111 is the max. Now let's change the county. Let's go back to California. And let's pick Los Angeles County. And we'll say there's 3 people. And we're going to do 10,000 like before. And 800. And finish. They do meet the income limits because in Los Angeles County, the max USDA limit is $148,950, and their income's $129,600. So I hope that helps you. Now, you'll notice here, Direct Rural Housing Loan Program. So the difference between Guaranteed Rural Housing and Direct is Guaranteed goes through a mortgage company, a mortgage lender. And if you go through a mortgage lender and they guarantee the loan, so essentially they're underwriting the loan, they're taking the responsibility and the risk to make sure that the loan meets USDA guidelines, then the purchase price is going to be higher, the income limits are going to be higher. But if you bypass the lender and you want to go directly to USDA and not use a lender, then the purchase price limits drop, the income limits drop. They're much more conservative. And from what I've heard, it can take a little bit longer to go through USDA Direct. But you'll have to check with USDA to see what their current turn times are as far as getting your loan underwritten and approved. That's it. That's pretty much what I wanted to cover on the USDA Rural Housing Loan. Make sure that you copy this website address so you can check out the areas if you're interested in the loan. And just remember The monthly mortgage payment can't be more than 29% of your gross income, and it can't be more than 41% of all of your debts from what you make each month, unless your credit score is 680 or higher. And really, there's no minimum credit score limit for USDA. The credit score limit is set by the lender. So some lenders might have a cap of 620, some might have a cap of 600, some might be lower. But generally speaking, a lot of lenders tend to be in the 620 range. That pretty much does it. If you have any questions, you can always go down and leave a message in the comment section below.